Capital FX signals. Chart formation patterns. Rising wedge. A rising wedge is a bearish formation pattern where the price consistently creates higher highs and higher lows. The support line is steeper than the resistance line. Every new high is created with high momentum, signaling an underlying weakness. There are two variations to this pattern. The first one is a bearish reversal pattern and looks like this. In an uptrend, the price creates higher highs and higher lows as the buyers are losing stream. The price has lost its momentum and struggles with pushing price significantly higher until the sellers prevail and finally price breaks to the downside. The second variation is a bearish continuation pattern. It forms after a strong downtrend as the price retraces higher. As the main trend is still bearish, there is no momentum behind the bullish moves, and eventually price breaks to the downside to resume the bear trend. The price target for this formation should be the height of the wedge measured down from the breakout point. Don't forget to subscribe and leave any questions below in the comments section.